Alright, so we have to talk about the FOMC meeting that happened a few days ago, and I actually recorded it when I was in Busan, South Korea, but right now I'm in Cheonju, okay, and it's going to be my last night here. So I tried to upload the video, but apparently because my phone setting for the video was actually put quite high, relatively at about 4K or so, and it takes a really long time for me to upload the video. So I've been uploading for quite some time, so hopefully I can get this out to you guys on Wednesday so that you can actually see the whole entire my thoughts on the FOMC. But anyway, I'm just gonna be running through it all over again. I recorded like about 14 minutes or so, but yeah, I do need to be slightly quieter because in this accommodation, basically everyone is staying next to each other and the walls are really thin. Right now I'm outside because my room is a mess and I don't really want to be recording there. Okay, so let's talk about the FOMC meeting. Okay, so according to the expectation video that I actually had, talking about how Jerome Powell would most likely be increasing rates by 25 basis point increment. But of course, that didn't happen, and I'm going to be explaining why. So of course, for people who are well aware that this is the second time that we have been pausing, which unequivocally means that we're most likely getting into a pausing cycle and eventually a cutting cycle. So right now, markets are probably going to be rallying quite hard simply because the best time for you to buy any form of an asset, be it stocks, securities, bonds, whatnot, is right before the cut happened. Okay, and of course right now we are unable to recognize and see where the cut is going to be happening, and because of that we can only see where the pause or the start of a pausing cycle would be. That's the safest, which is why a lot of people are getting into stocks right now, because they think that a pausing cycle is already starting, which eventually, well, I mean, effectively, if you were to really look into it, if 3 months from now and we are still pausing, effectively we were in a pausing cycle since October. Okay, so you can actually see it that way. But anyway, let's go through the reason why I think the pause actually happened. Okay, so first of all, we have to talk about why the pause happened. Personally, it's because I feel, and I think it's quite obvious as well to a lot of market analysts, which is the treasury yield has been going up and up and up. And I think that's not going to be changing anytime soon. Okay, when treasury yield goes up, generally stocks goes down. Okay, the only reason why stocks are going up is not because treasury yields are going down, but it's because the Federal Reserve decides to pause. And like I said before, my previous reason stands. People think that we're getting into a pausing cycle. People just buy into the market. And I think that's kind of what's happening right now. So if you were to actually take into consideration, chances are you're going to be watching this on Wednesday or Thursday, I'm not sure. But do understand that I actually made this video like a week before. Okay, but I guess it doesn't really matter. People are getting into stocks right now not because treasury yields are going down. It's the other way around. So right now we have to talk about where key assets are going to be like. Personally, I think that a lot of assets that would actually be going up in price, that's something that we have to be slightly more concerned about in the short run. And when I say short run, it can easily be 5 months all the way to a year. Okay, it's because during this pausing cycle, what will most likely happen is people with a lot of excess amount of money, what they will try to do is that they are going to be going into assets that would most likely go up in value in the next decade. So chances are people are going to go into stocks, people are going to go into real estate, and I'm going to tell you why. Currently, the real estate market is going through some form of a hibernation because sellers do not want to sell any of their current holdings. For example, if I own 10 properties and I'm financing right now about like 3.5% on average across all of my 10 properties, why would I then sell one of my house away, or one of my properties away right now, to get cash and not know what to do with this cash, right? Because the things that now that I get this sudden huge influx of cash, I would most likely want to buy another property. And buying a property right now, mortgage rates are most likely going to be somewhere in the 8% range to 9% range, which is stupid. Okay, getting into properties right now kind of don't make sense. Getting into an 8-9% kind of mortgage rate, pretty hard. Buyers, on the other hand, similar thing. Why would anyone want to buy into an 8% mortgage real estate sort of situation? So people are basically just renting. But let's not forget, because there's not a lot of buyers, which means there's not a lot of houses on the market, which means all the houses that's on the market are basically out for rent. And all these houses that's out for rent, for example, you now have this sudden influx, or you can say a sudden imbalance of available houses to renters. This imbalance would in return change the whole entire balance of things for rentals, because right now rental prices have been soaring quite high. Prices of houses have been going up quite high. And what a pausing cycle would most likely bring to the market is that we are most likely going to be seeing possibly an exchange of like a shift for us to really move over from a high frequency market for people who are buying houses over to people who are most likely going to start transacting in all these different houses. And I think that's where the real shift would actually come in. So personally, I think housing prices inflation, most likely you're going to see a lot of it. Stocks, again, I think stocks is a slightly different game as compared to housing prices, simply because stock prices goes up for a lot of different reasons. It can be because of more buyers, because of a better business, because of inflation, because of deflation. Anything can really affect the stock prices. So it's really hard for you to really pinpoint one certain reason why a stock is doing well or the general economy is doing well or bad. Okay, so I think inflation might seem like it is diminishing to a certain extent. Some might even call inflation dead from what the FEDS have been doing. 11 consistent rate increases finally destroyed inflation. Probably headline somewhere. But let's be honest here. The core PCE that we actually got for the last month wasn't fantastic. And I think Jerome Powell don't think that his job is done either. I think Jerome Powell himself knows that inflation is not dead. And there is a very, very good chance that if we were to stay the course for what we are going through right now, inflation might very well just come back. And when inflation comes back like this, it's going to be a little bit more concerning of some sort, simply because when inflation comes back, it's going to be tougher for them to really do anything about it. Because when that happens, it means that they are unable to raise rates any further, because rates are already either in a pausing cycle or a cutting cycle. And for them to raise rates in either of this cycle would basically destroy the government. So I think Jerome Powell is going to be in a very, very tough situation. All these different cycles require momentum in the market. So you do not want to be spoiling any sort of a momentum. There are a lot of organization, politicians and all who are already going up to the Federal Reserve and their board members to tell them, like, talk about how inflation is dead, because inflation is basically dead. You have to emphasize on the fact that inflation is effectively gone. But let's be honest, it's not. So I think it's going to be quite interesting for us to really see what's going to be happening in the next 15 to 18 months, because historically, like I said before on my videos as well, it's about 15 months for us to really get through a pausing cycle before we see the first cut. But personally, I think that we're not in a pausing cycle just yet. And stocks is not going to be a fun place to be in for the next decade. But of course, I can easily be wrong. I am already looking for multiple exits on some of my stocks. Just yesterday, I actually sold out on a few of my stocks holding. I'll be going through them when I get back to Singapore. One of them I got absolutely destroyed because the moment I sold it, it kind of just bounced up like 10%. But I'll talk more about it when I'm back in Singapore. But yeah, you know, I thought that, yeah, it's a dangerous time, I guess, in some sense. I'm really thinking about this on my solo trip in Korea. So yeah, FOMC wise, I think there wasn't really something that was like super duper interesting. I think Jerome Powell talked a lot about the labor market. He talked about, well, he was kind of flexing a little bit, boasting about how employment managed to reach, well, there have been multiple pretty solid employment reports to show that they have reached near max employment. So I thought that was quite interesting. But of course, again, dual mandate of the Federal Reserve is to ensure inflation is kept at a reasonable level at about 2% and max unemployment. So of course, dual mandate wise, they have already completed one of them. Now for them to get the other one out of the way. But yeah, anyway, I think that's really all I have to talk about the FOMC. I'm not sure if I can get this out in time. I really hope I can. But yeah, anyway, right now, it's almost 6 p.m. here and it's super duper dark already. But I do intend to go out to a night market to see what's up. But yeah, and also I do intend to come out with maybe edit a vlog of some sort for this as well. But yeah, that's all. Thank you. Bye.